Hello everyone, welcome to ACCA P6 Advanced Taxation. We are doing the basis periods, still we are doing at the basis period. In the previous video lecture I took the same class of F6 and P6 because them were the basic basis period. There wasn't any complexities in them. It was same which you have seen at F6 level, so that was basically a revision. There were 6 examples which I listed on the board, and we were just reading the notes which were same for F6 and P6, and we tried to attempt the examples which were given on the boards, Now these are complex basis period. In the previous video lecture, all of the examples which we have seen, there wasn't even one scenario in which there was a change in accounting period. So there were different examples, and in every example business has started its operation, then they made accounts from one date to another date, and then they kept making the accounts for the next 12 months. So there wasn't even a single scenario where there was a change in the accounting period. But this is not the normally case, because in real life people can think of change the accounting period. Say for example, if I have started the business and then I thought, when I started the business I did not think about the taxation and all that, so I was just concentrating on the business. So I started my business, and then I made up my accounts to whatever date I wanted to. Then after some period I realized that I want to change the accounting period. Now whenever I change the accounting period, then the basis period will not be in the normal circumstances. It will not be like the normal circumstances. So whenever I make a change in the accounting period, it will result in a longer period of accounts. Now longer period of account means more than 12 months, or it could result in the shorter period of accounts, which means less than 12 months. So in them cases the basis period will be different as well. In some cases there will be overlap profit which will be added in the previous overlap profits, and in other cases overlap profit relief will be given, which means that overlap profit will be deducted straight away. So we do not have to add it, we just have to make the relief straight away. Right? Now there are 4 cases which are listed in our notes. I've made a short summary on the board just to make your life easy. So if you want to just note down this stuff on your notebooks, please. That is basis period, and we know that it is change of accounting date. Now normal accounting period is 12 months long, as I said. If it is longer period of accounts, it means more than 12 months, and if it is shorter period of accounts, then it is less than 12 months, because normal is 12 months. Now we have 2 different scenarios. One is shorter period of account, and the other one is longer period of accounts. Whenever we have made a change in our accounting date, it will either result in a shorter period of accounts, or it will result in a longer period of accounts. Right? Now if it results in a shorter period of accounts, there will be 2 different cases here. Now all of these cases are given to you in the lecture notes, as I said earlier. So if it results in less than 12 months shorter period of accounts, there will be two cases. If it results longer period of accounts, which means more than 12 months, there will be 2 cases in this case as well. So altogether there are 4 cases. Right? So all of these cases are given to you in the lecture notes. Now when it results in a shorter period of accounts, sometimes it happens that our accounting period was so short. Of course it was less than 12 months, but it was so short that there were 2 accounting dates ending in one tax year. So whenever we have made a change in our accounting period, it resulted in a shorter period of account, but it was so short that there were 2 accounting dates ending in the same tax year. Right? Now other cases opposite to that. So of course the accounting period was short, but it wasn't so short. It wasn't so short that there will be 2 accounting dates in the same tax year. Excuse me. So not 2 accounting dates in a tax year, basically opposite to that. There are 2 accounting dates ending in the same tax year. In this case, not 2 accounting dates in the same tax year. So these are 2 cases. Now say for example, if there isn't any, if it is not the case where the 2 accounting dates are ending the same tax year, which is case 1, in this case we will make the basis period will be 12 months to the new accounting date. So the new accounting date will be given to us in the question that we have changed our accounting date to this period. So our basis period will be 12 months to the new accounting date, which will result in the further overlap profits. So if there are already some overlap profits, it will be added in the further overlap profits. Right? excuse me. Likewise, if it is result in a shorter period of accounts and there are two accounting dates ending in the same tax year, the basis period will start from the start of the previous accounting date. So there will be two accounting dates. So it will start from the previous accounting date and it will end on the new accounting date, which will result in overlap profit relief given by the months exceeding 12 months. So I'm just telling you so that you can write down on your notebooks. We will do from the lecture notes where you will understand it in a better way. Just note it down for now, please. Then there are two cases where the accounting date results in longer period of accounts, more than 12 months. In the third case, it says a tax year not missing, and in the fourth, missing tax year. Now, change in accounting period has resulted in a longer period of accounts. Now, accounting period was so long that there was no accounting date in one tax year. So there was one tax year in which there was no accounting date ending. So it is missing tax year. So there was a tax year in which no accounting date was ending. So it was so long that there was no accounting date ending in the tax year. Whereas the other case is opposite to that. So although the accounting period was so long, but it wasn't like the tax year was not missing. Right? If the tax year is not missing, then the basis period is same as accounting period, so it will be exactly equal to 12 months. Whatever the accounting period is, it will be exactly like that. And overlap profit relief will be given by the months exceeding 12 months. So overlap profit relief will be given. Excuse me. So it will be exactly equal to the accounting period. Of course, it will be more than 12 months. I beg your pardon. I already said that it will be 12 months. It won't be 12 months. It will be exactly equal to the accounting period, which will be more than 12 months, of course. However, if the accounting, if one tax year is missing, so there was a tax year in which there was no accounting period, there was no accounting date in the tax year. Now, in this case, we will have to manufacture our basis period. Now, we see how to manufacture in 3 steps. We will see when we read the notes. It says manufacture 2 basis periods manually, which will result in the further overlap profits, which will be added in the previous overlap profits. I'm just going to share the already lecture notes with you through the screen share option, so we can read the notes together. If you come to page number 33 of your lecture notes, which is chapter number 8, change of accounting date basis period. Now, first of all, the case 1 is given. I hope that you have already noted down what I have listed on the board. Now, you can see your lecture notes and you have already this material on your notebooks anyway. So it is exactly the same material which is listed in the lecture notes. Anyway, in the first case, it says when the change of accounting date results in one short period of accounts. So we have changed our accounting period, which has resulted in a shorter period of accounts, which is less than 12 months. Forget about the rule for now. Don't read the rule for now. Just read the example which is given below. Just read the example, please. Now, in the example, it says on the left side. Now, left side accounting periods are given. So we made our account from 1st of January 2000 to 31st of December 2000. Profit was £3,000. Likewise, we kept doing until 31st December 2002. Now, our year end was 31st December every year. Then we thought that we will make our accounts to 30th of June every year. So when we have decided we will make our accounts to 30th of June, so we made our accounts from 1st of January 2003 to 30th of June 2003. Now we have changed our accounting date, which has resulted in a shorter period of accounts, which is less than 12 months, in this case, which are 6 months, right? Now our accounting date is changed in the shaded area in the left side of the example. On the right side, the basis periods are given. So what will be the basis period? You can check on your lecture, you can check on your notebook as well, the material which I have listed on the board. This is the case 1. It says the basis period is 12 months to the new accounting date. So that's what it says, excuse me, that's what it says in the notes as well. If you read the rule say the basis period for that year is 12 months to the new accounting date, resulting in overlap profits which will be added in the previous overlap profits. Now, if you check the basis period, so it is ending on the new accounting date, which is 30th of June 2003, but it is 12 months ending that date, so it will start from 1st of July 2002. So it is, the rule says that 12 months ending to the new accounting date, right? Excuse me. Now, just beneath that, it says that assume there is an assumption that the overlap profit was £6,000 at the start of the question. So overlap profit was £6,000 at the start of the question, which is for 6 months. Excuse me. Now, in this example, which is given on the which is given on your lecture notes. Now we should have taken 6,000 on the basis period side. If you see, the profit is £8,000, whereas we should have taken £6,000. How did we took £8,000? £6,000 is for these 6 months, whereas £2,000 we took from the previous 4,000, which was for 12 months. So the previous 4,000 year ending on 31st December 2002, this 4,000 was for 12 months. So we took 6 months worth of profit from there, because we are taking them 6 months as well into our basis period, right? So 6,000 plus 2,000 is equal to £8,000, which you can see on right side of your lecture notes. So that's why £8,000 is profit. Now overlap profit will be added to the previous overlap. We should have taken £6,000, whereas we actually took £8,000. We took £2,000 extra, which will be added in the previous overlap profit. So the previous overlap profit was 6,000, and new overlap profit is 2,000, which equals £8,000 in total. Right? Now if you come to the second case, which is on the next page, which is page number 33, when change of accounting date results in one shorter period of accounts. Again, it is resulted in the shorter period of accounts, which result in 2 accounting dates in a tax year. So it was so short that there were 2 accounting dates in a tax year. Now if you look at the board, this case here, as I said, 2 accounting dates ending in one tax year. Now forget the rule for now, just read the example first. On the left side, business was doing fine, year end was 31st December every year. Then they decided to change the accounting date. So from they thought that I want to make the change to 31st of March every year. So then he made up his 3 months account to 31st of March 2003, from 1st of January 2003 to 31st of March 2003. So accounting period of change was so short that there were 2 accounting dates in one tax year. Now if you see shaded area, 31st of March 2003, which tax year is it? 31st of March 2003. This is tax year 23, isn't it? Just look the previous tax accounting date, 31st of December 2002. Which tax year is it? That is also 23. So accounting period which resulted in a change that was so short that there are 2 accounting dates ending in the same tax year. Now if it is like that, just read the rule now, please. It says the basis period for that year begins immediately from beginning of the previous accounting period. So it will begin from the previous accounting period, start of the previous accounting period. So start of the previous accounting period is 1st of January 2002, but it will end on the new accounting date, which is 31st of March 2003. Right? Overlap profit relief will be given up to the months exceeding 12 months. So of course this basis period will be more than 12 months. So overlap profit relief will be given by the months exceeding 12 months. Right? So it is from 1st of January 2002 to 31st of March 2003. So it is £7,000 we took here, £7,000 profit. So how did I get £7,000? £6,000 was actual profit, £4,000 was previous 12 months profit, altogether £10,000. Right? How many months exceeding 12 months? 3 months exceeding 12 months. Overlap profit for 6 months, which were assumption in the question, overlap profit for the 6 months was £6,000. For 3 months, it would be half of that. So £3,000 would be overlap profit for 3 months. So overlap profit relief means 10,000 minus 3,000 is equal to £7,000. So that's what it is written in the notes. Just beneath that, if you see overlap profit relief. So first we have to determine how many months exceeding 12 months are. Our basis period is 15 months long, so 3 months exceeding 12 months. At the start of the question, there was overlap profit of £6,000. So for 3 months, it would be £3,000. So we took profit £6,000, which is for our current tax year, current accounting period, which is 3 months long. 6,000 profit, that one. And the previous accounting period profit of £4,000 as well, which equals 10,000 less 3,000 equals £7,000. I hope it makes sense now. And if you come to third case, now change has resulted in a longer period of accounts. This is the third case which I have listed on the board. Tax year not missing in this case. So if you look at the examples, please forget the rule for now. Don't read the rule for now. Just read the example. So year end was 31st of December every year. Then they have decided to change the accounting period, which has resulted in a longer period of accounts. So they again decided to change it to 31st of March, but they made accounts to 31st of March 2003. right? So from 1st of January 2002 to 31st of March 2003, so it resulted in a longer period of accounts, which is more than 12 months. In this case, what does the rule says? The basis period for that year is same as accounting period. So the basis period will be same as accounting period. Accounting period is from 1st of January 2002 to 31st of March 2003. Our basis period will be exactly equal to that, 1st of January 2002 to 31st of March 2003. Right? However, in the rules it says resulting in the basis period of more than 12 months, overlap profit relief will be given up to the months exceeding 12 months. So basically, this was £8,000 worth of profit in our accounting period. So we'll take £8,000, but however, we will give overlap profit relief. How many months are exceeding 12 months? These are 3 months exceeding 12 months. Overlap profit for 6 months was £6,000. Overlap profit for 3 months would be half of that, so 8,000 less 3,000 overlap profit. So in the basis period in our current tax year, it would be £5,000. Right? I hope it makes sense. Now if you come to the next page, which is the case 4 and last case, please. Last case is case 4. When change of accounting date resulted in a longer period of accounts, so our change has resulted in a longer period of accounts, but the accounting period is so long that there is no accounting date in a tax year. So missing tax year, there is no accounting date in a tax year. So if you see the example, please. Year end was 31st of December every year, then they have decided to 30th of June. However, they have made account to 30th of June 2004. So it has resulted in a longer period of accounts, very long. From 1st of January 2003 to 30th of June 2004. Excuse me. Now in the shaded area, if you see 30th of June 2004, which tax year is it? Tax year 45, isn't it? Now this is tax year 45. What is the previous tax year? If you check the previous accounting date, 31st of December 2002, which tax year is it? That is tax year 23, right? So that is 23, and the next one is 45. So tax year 34 is missing. So there is no accounting date ending in the tax year 34. Now our accounting period resulted in a longer period of account, which missed the tax year. So there was no accounting date ending in one tax year. So it was so long. In that case, how would we make the basis period? Now if you read the rule, it says you have to follow the 3 steps. Take the new accounting date. So new accounting date is 30th of June 2004, isn't it? Accounting date. It is not asking about accounting period. Accounting date. So accounting date is 30th of June 2004. That is new accounting date. Deduct 12 months out of that. So if we deduct 12 months out of that, it would be 30th of June 2003. So it says first basis period will be ending on that date. So 12 months ending on that date. So from 1st of July 2002 to 30th of June 2003, that is our first basis period. The next basis period will be starting from where the previous basis period ended. So it will be from 1st of July 2003 to the next 12 months, which is 30th of June 2004. So we'll make 2 basis period. We will manufacture it manually according to these 3 steps rule. Right? Now, excuse me, it says that resulting in a huge overlap profits, which will be added in the previous overlap profits. So in this tax year, in the basis period, if you see, we have taxed twice, £6,000 twice. So £6,000 for the basis period ending on 30th of June 2003, and then £6,000 again on the 30th of June 2004. Right? So altogether £12,000. Whereas how much we should have taxed? We should have taxed £9,000. So how much we actually taxed? We actually taxed £12,000. So £3,000 we extra taxed, which is overlap profit, which will be added in the previous overlap profit. Previous overlap profit was £6,000. So the new one would be £3,000. So altogether £9,000 worth of overlap profit. Right? Now on the next page, the mind map summary is given. So it is not tough. You just have to revise it. It is exactly the same thing which I have told you during this lecture. And the thing which I have made on the board, that is also very good for revision. So it will help you revise. You might not have understood while I was reading from the board, but now I hope that you got it right, because with the help of the example, it was very easy. We will do one question as well, you don't have to worry about it. We'll do one past exam paper in the next video, then you will understand it even in a better way. However, there are certain conditions for change in accounting period. What are those? The trader must notify HM Revenue and Custom by 31st of January following the tax year in which the change is made. So you must do by 31st of January after the tax year of change. So if we have made a change in our tax year 17-18, then we must inform HM Revenue and Custom by 31st of January 2019. Then it says the period of accounts resulting from the change must not exceed 18 months long. So the maximum accounting period long would be 18 months, so we cannot exceed 18 months. There must be no previous accounting change. There must be no change in accounting date in the previous 12 months. So in every not 12 months, in every 5 years. So you can only change your accounting period once in 5 years. You cannot do so very often than that. Right then, so that was our change in accounting period, basis period, which are so-called complex basis period, but they're not so complex, are they? So they are so easy if you just learn them. We will do one question as well anyway, so you will understand it and understand it in a better way. I will see you in the next video, and we will do one question as well of this basis period. I'll see you then. Goodbye.